Welcome back to a brand new lesson brought to you by Funding Frontier and myself, Ryan Cruz. I'm a trader of 5 years experience, fully funded, and I'm a full-time trader. Today's lesson, we're going to be looking at strategy mastery, building and validating your edge. So without further ado, let's jump straight into it. So first of all, we're going to be looking at the core components of a professional strategy. Now, there's two things and two factors that we do need to look at here, because it's not all about purely just the trading and the internal factors about the trading. There's also external factors that you need to think about too. But let's start off with number one, internal factors. The main core component of a professional strategy when trading is your plan. Your plan is vital, and I can't stress that enough. That is 99% of the core components of a professional strategy. Without your plan, what are you going to have in set in place? So number one with your plan is essentially, what is your strategy? There's a lot of strategies out there. There is SMC, SRC, you've got ICT, there is breakout strategies. There's so many different strategies out there. You can sometimes, at times, you can tweak some strategies to your own identity. Like I now obviously mentor and educate others as well. So I now mainly base mine off SRC/MC, which is my own mentorship. But you need to know what strategy you're going to do, and then base your plan around that. So for example, mine's mainly SRC. It's like a breakout strategy, right? So what do I now do? I base my whole plan around that. Now, within your plan, is it structured? And make sure it's your Bible. Have a structured plan, and that is now your Bible. That is what you swear by, that is what you live by. And you are not going to deviate away from that. As soon as you start deviating away from your plan, that's when things start to go wrong. So I'm betting you 9 times out of 10, your plan is a good plan and it's a good strategy. Now, if you're finding it hard to make that on your own, because you're unsure yet and you're at the beginning stages of your trading journey, then there's so much help out there. That can be from myself, Funding Frontier, all over the internet. There's a lot of help, but the best thing to do is don't start looking up loads of different things on YouTube. What's the best plan? Blah 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 blah. You need to have a solid community, a solid mentor, or a solid trading plan that you devise yourself that you know is proven to work. Right. Starting off with, these are a few examples here. How much risk are you going to do per trade? Now, for me, I do 1 to 2% risk per trade. Nothing more, and I will advise that as well. Anything over that, you're starting to risk too much and start over leveraging each trade, and it can go quite sour quite quick. All it takes is, if you start doing 5-10% a trade, all it takes is a couple of trades and you've lost your prop firm account, you've lost your challenge account, you've lost your live account. So no more than 2% is really good discipline. I will advise 1 to 2% per trade, even 0.5% per trade, to start things off is a good, wise idea. How many trades are you going to take per day? You have to have this in your core plan. How many trades are you going to take per day? You can't just go into the charts and do whatever you want each day. Is it just the one trade that you're going to take per day? Which is absolutely fine, by the way. Sometimes I only take one, sometimes I take none, because my setup's not there. 1 to 2 trades a day, that's what I'm going to advise. But if your plan is to take 3, 4, that's not too bad. Anything more, you start becoming into the bracket of over trading, especially if you've taken a couple of losses, which leads me up onto my next point. What are you going to do then? So you come to the charts, your plan is to take 1 to 2 trades a day, and your first trade is a loss. What are you going to do then? Are you going to quickly then jump in to the next trade, take another loss, and then get angry that you've just lost 2 and you want to make that money back and jump into another trade? You have to think, what is that core component in your plan? How many trades are you going to take, regardless of what's going to happen? So have a think about that as well. So my advice, 1 to 2 trades a day. Next point, risk management. Where are you going to put your stop loss? Where are you going to put your take profit? This is all in the plan. You have to have this written down, written out, and make it your Bible. Where are you, dependent on your strategy? So you're using the breakout strategy and you're trying to use clean candles to the left. Where's your TP? Is it based off the structure and the price action to the left, or Is it halfway up? Is it to do with a fib level? Is it to do with a wick fill? It can be anything, right? But you have to stick to it. Where's your TP going to go? Where's your stop loss going to go? Is it going to go below the range, below the previous candle, below the current candle? That's another thing you need to think about in your plan. And what session are you trading? So again, the best sessions for me are the London session and the New York session. Most trading strategies need volume, right? Majority need volume. Looking at the London session and the New York session, which are the two high volume sessions, they're the ones you want to be trading. Don't be going over to the Asian session where sometimes it has a bit of volume. But Asian session is commonly known for low volume. So I wouldn't be going around messing around with that unless you're a consolidation trader. But it's very unpredictable. It just barcodes side by side, very, very. But don't fall into the trap. You might see a couple of Asian sessions where it has volume. Don't fall into that trap thinking, okay, that's going to be good now. Again, stick to the plan. What session are you going to be trading? So there are just a few internal factors that are core components of a trading strategy, right? So you have to, and the main thing is the plan. You have to have that plan set out in stone. What about the external factors though? You've got professional trading strategy to do with the charts, the markets, but what about you in your life? What are you doing apart from trading? It is so unhealthy to just look at the charts 24/7 a day. It's so unhealthy to wake up, go to the charts, do some trading, then go and grab a Monster or an energy drink to keep you going, go back to the charts, and then go have a McDonald's or something at the end. You know, it is really unhealthy. And I'm saying this because you need to keep your mind focused and healthy. You need to keep your body and your mind happy, right? If you're coming to the charts and you're eating crap, drinking crap all the time, don't get me wrong, it's nice to have a treat and everything. But if you're doing that day in, day out, psychologically, that is going to be so bad for you. It's going to have such a bad effect on your mental health and your well-being. So I'm not saying you're going to have to go and run a marathon every week, but it's really good to keep yourself focused outside of trading on goals, right? Whether it might be some business goals, it might be leisurely goals. And for me, I have good hobbies. I play football, play for a team. People have business aspirations as well. Getting outside, just go for a walk once a day. Maybe your challenge is to do 10,000 steps a day, you know? But what are you doing outside of trading? That is be another core component to do with your trading plan, right? Get that in your plan. Backtesting methods. So backtesting methods, what are you doing to ensure that your strategy's working? Because you can't just go to the charts and expect to learn straight off the bat like that. You need to go back, on the charts, using your strategy, using previous charts, previous data, and then use your strategy on those charts. This has many, many benefits because not only does it prove that your strategy is correct and it's a high probable strategy, that it is consistent and it's worth doing over time, psychologically it's really helpful as well. For example, getting in the trade, you go into profit and you close too early. You can actually see them trades play out and run using the back testing, right? So if you know that, 8, 9 times out of 10 that they run for longer, then when it comes to the real live markets, then you're more likely going to hold them. And vice versa. If you start seeing a specific setup in your live trading and you're like, oh, it's only worked 5 times out of 10 recently, go and back test. Get a simulator, go and back test on the charts, or even just go on the previous charts, have a look and find that setup. How many times did it actually work? Go and test it 100 times. If it only worked 50 out of 100 times, take that out of your plan. It's not worth it. 50-50 probably setup, what are you doing? You don't want to be trading it, I promise you that. You want at least 70-75% for that setup to play out. You go and test that one setup in your strategy, do it 100 times, count and tally down how many times did that play out, because that's where the real graph comes in. Even if it's 60% of the time it works and 40% it doesn't, it's not good enough. You need to be in a trade that is going to have a higher probability of playing out. So that is how you're going to do it. But when are you going to do it? Right? If you're focusing on, if you've got time to focus on trading just during the New York session, so you might have 3 or 4 hours in a day. You might only have 2 hours in a day that you can focus on the session. You might have work commitments, other commitments, whatever it is, but you only have a little bit of time to do the New York session. So then you think, Ryan, how am I going to do backtesting sessions during that time? Don't do it during your trading hours. You have to find time to do these maybe in the evening after you finish your day, you finish your work, finish your leisurely activities, you're having some downtime in the evening. Just put an hour in, half an hour sim session or an hour. Just do 1 week, 1 week simulation session, back test it, and see how your strategy got on. See, and build your confidence with it all. Did you make 2% for that week? Great. Did you make 4%? Great. 5%? Amazing. So if you can then start devising the core components into the back testing session, you're going to keep leveling yourself up every single time. It's going to build your confidence and then just replicate what you're doing in the sim sessions into the real life markets. And again, that really what we've already spoken about. What is a session? So you can use simulation sessions. You can go on to MT5 Simulator. I use that. I also use FX Bullsheet, which is really good. They actually have a journal on there with a backtesting simulator as well. You can go on TradingView. You can rewind the charts there. You can even just scroll back on TradingView charts and try and find them setups there as backtesting. So yeah, really highly advise that you do that, guys. Moving on. What about adapting strategies to market conditions? Now, what do I mean by this? So if we take a look at this example on the board now, so you have a bullish candle, great. Your trading candle is the next candle. But say you're on gold, there's loads of volume. At the moment, Trump's just come back into presidency and he's just started fresh on this week. So there's a lot more volume at the moment. And in each candle, there's more pips in each candle, right? Well, if your strategy is to risk 1% per trade, and then all of a sudden, normally you might be risking about 20 pips for the stop loss underneath the current beneath the previous candle. But all of a sudden, in these candles, they look this, but actually there's so much more volume in each candle. There's more like 40 pips in each candle now. So much more volume. So what are you going to do? You're still going to use the 1% rule and just risk more, because then that would turn into 2%. No, what you want to do, if you want to stick to your plan, stick to your rules, all you have to do is then half your lot size, adjust your lot size accordingly to the pip count. So you can stick with your same strategy. You don't have to change your strategy. All you've got to do is just adjust your lot size. So what you're doing there is adapting your strategy to the market conditions. Another example, what if you were in this trade, you were 10, 15 pips up, but you're looking to hold it on the next candle, but the next candle then prints bearish. Again, you weren't expecting it to print bearish because you still got loads of clean candles up onto the left-hand side. You're expecting another 40 pips out of the trade. However, you're in a little bit of profit, but the next candle then says, hang on, I'm going to start rejecting now. What are you going to do then? Are you just going to hold and hope? No, you're not. What you're going to do, the very minimum, you can put your stops to break even. You can secure some partials whilst you're in profit, then it's risk-free. Or you can start to trail your stop loss below each current candle. So whilst you're in profits, so that rejection candle, if that is truly going to reject, you're at least going to secure some profits, and then you're at that trade because it started to reject at that point. Or if the candle's showing you, I'm going to start rejecting now, and it is a strong confirmation on all the time frames, then you can just close that trade. You can simply close that trade. So again, you do have to adapt to your plan sometimes. If your plan is to hit a certain area in the charts, you have to adapt. This is why I really truly disagree with set and forget. Because if you set and forget, you can set a trade, and then what if that trade went 100 pips in profit? You had no idea about it because you've set and forgot. You're in that trade, you're in loads of profit, you're 2% up on that trade for that day, but you had no idea because you set and forget. And then you come back to the charts later, and you saw, oh, the two candles that printed when I was 100 pips in profit were a clear sign of a rejection. But what if you saw them in that moment that they were rejecting? You'd close the trade because you're a sensible trader, right? So that's why I heavily disagree with some forget. Okay, common mistakes in strategies. Now, the number one mistake is mixing strategies. Once you start trying to learn one strategy, you go to learn another strategy and you learn another strategy because that one's not working, and you go to another strategy because that one's not working. All of a sudden, in your head, you've got 1, 2, 3, 4 strategies in your head. And when you come to look at the charts, you're like, oh, that candle structure is saying strategy number 1 that I learned. But then I look to the left and I see, oh, a fair value gap. That means it's going to start rejecting. And then, oh, but there's clean candles to the left-hand side. So that means we're going to fill them clean candles. Oh, but there's an inverse fair value gap there. There's liquidity there, blah, blah, blah. You have no idea what you're doing because you're so scrambled in your head. It's so psychologically damaging because you've got so many mixed strategies in your head. You don't know where to look on the charts. So the best advice is to stick to one strategy and master it. Don't learn, oh, I'm okay at that strategy. I'm a little bit okay at that strategy. I'm all right at that strategy. I'm not great at that strategy. You've got a little bit of like 10% in each. And you come to the charts and you know a little bit about each. No, go all in 100% on one strategy and stick to it. Do not change. Build a strategy scoring system. So especially with prop firms as well, you're looking to pass a challenge and become funded. 1 to 2 trades a day changed my life, right? This is my scoring strategy. This is my scoring system. Just taking 1 to 2 trades a day, it did change my life. When I tried to take, 5, 6, 7 trades a day, I'm over trading. I'm getting angry, getting stressed. I'm getting anxious. I'm revenge trading. It's too much. And take that from me, personally and honestly. Take that from me. Just stick to 1 to 2 trades a day. Whether you win, you lose, or you have a break even. Once you've done that, once you've done your 1 to 2 trades a day, I mean, I highly advise if you've got your win for the day, leave. Just do it. Just leave. You don't have to take another trade. Perhaps if you've got a break-even trade or a loss and you're going for a nice re-entry, that happens at times, and you're giving your trade a second chance, that is fine. But then let's say that one won, so then you've got 1 loss and 1 win for the day. You're at break-even, right? Let's say, for example, you're like, oh, now I can take another trade, but now you're thinking psychologically, you're thinking the wrong way. You're like, oh, I'm back to break-even. I could take another trade. I can try and get up and be in profit for the day. But then you lose that one. So you think, oh, I can just take another one then and get back to break even. Then you lose that one. Now you're 2% down all of a sudden. So whatever you do, take 1 to 2% trades a day, 1 to 2 trades. It keeps your psychology in check. It really does. It's very healthy for you. And once you've done that, win, loss, or break even, close the charts. You are done for the day. Choose your best probable setups and just take 1 to 2 trades a day. I'm telling you now, if you are taking 5, 6, or 7 trades a day, you're not looking for the best probable setups. You're over trading 100%. That is the end of this lesson, guys. I hope you've enjoyed it. Please comment down below your favorite strategy that you use. I'll comment down below my favorite strategy and the strategy that I use, I mentor, I teach, and that I swear by. Please don't forget to like and subscribe for more trading education. And finally, don't forget to follow Funding Frontier and myself on Instagram. That's at Funding Frontier and at Ryan Cruz FX. I hope you enjoyed the video, guys, and I will see you on the next one.